Hey everybody, watching Bull, Boom, Bear, Bust. It is Friday, April 28th, 2023. Back with another dose of economic reality, of course. Now let's start off with this. Some people, some viewers of the channel have actually said, some of you out there maybe even watching right now, have actually said that we don't give any solutions here or any help. It's just all bad news. Well, I'd say you're wrong, because if you haven't heard the investment methods or strategies that I do, then maybe you haven't been listening. And I'm not saying that you should do what I do. I'm just telling you what I think is going to happen, what I've been doing. And I say it pretty much every 2, maybe every 3 episodes. I kind of give you my strategy, what I think is happening, the big picture. And if you haven't heard that, maybe you haven't watched those videos. So maybe try watching more consistently and you'll hear it. Because you watch one video a week and then you think that I didn't say something or that I never say something. So please like and subscribe and come back and don't miss a video, and you'll get the big picture here. But let's start off with some help. Here's a way to save money. Let me put up a picture right here. How to save money. Find a date or partner or significant other that will not complain about going to a cheap food place, a cheap restaurant. There you go. Looks like he's having a nice conversation with his significant other right there. All right, let's get into the news, folks, the real news. And things are looking very interesting here. We've got emergency loans coming out of the Fed into the banks. The central banks are basically keeping the banking system on life support. Emergency loans rise again amid renewed financial stress. Last episode, we talked about First Republic Bank, another bank basically on life support. And I think that's going to be just the latest or the next one in the multiple bank failures that we're going to see here in 2023. The entire banking system is insolvent. These banks have been loaning out money that they don't have. Fake money created digitally with the click of a mouse. Ultimately, we're going to go back to hard asset-backed currency. That's why I continue to say stack precious metals, especially silver, the most undervalued. And before we proceed, let's get a word in from our sponsor, and then we'll come right back on the other side to give you all the latest, most important financial economic news. Noble Gold Investments have made it their mission to stay on top of the most important economic news. 3 bank runs in the last month. These are the second largest and the third largest bank runs in history. The government is taking steps to guarantee all deposits. That means more money printing. Plus, the Fed is sitting on unrealized losses of $1.2 trillion on their $8.3 trillion bond portfolio. And the Fed could continue to raise interest rates until they crash the economy. Do you know who are the only ones that are not afraid? The ones who are invested in gold with Noble Gold Investments. Gold is the most stable asset outside of any government control. Thousands have approached Noble Gold Investments to get their hands on gold. Hurry and go to bullboomgold.com to secure your wealth now. Bag a free 5-ounce America the Beautiful coin with each gold or silver IRA if you qualify. Go to bullboomgold.com. That's bullboomgold.com. The link is also in the description of this video. All right, out of Bloomberg, emergency loans rising again. Well, interesting. We had a few news outlets telling us that the bank crisis was contained. We had some talking heads coming out there saying that this was contained, that everything was under control. Why are emergency loans rising again? Well, I think we should all know, because these banks are basically insolvent and people are beginning to realize what's happening, and they're pulling their money out of the banks. 1, because they're scared. 2, because they want to put it somewhere else where they feel they're going to get a bigger return. So we're seeing money market inflows again here. And the bank of the mattress. A lot of people just want to be out of the system and into precious metals. We're seeing big inflows into precious metals. And, that is the currency has not died over thousands of years. You look at precious metals that are coined or just bars or just bullion. It has been currency for thousands of years. You can't say that about any other fiat currency, any other paper currency, or anything that's not backed by something tangible. So that should tell you, the currency that's going to survive through no matter what happens coming up here. Banks increased emergency borrowings from the Fed for the second week in a row, underscoring ongoing stress in the financial system following a string of bank collapses last month, right? Nobody here on this channel that watches this channel frequently is surprised by this. You're going to see more of this. That's going to have to be endless life support. They're not calling it quantitative easing. I don't think they want to put it out there that there's quantitative easing happening. They're supposed to be tightening. Remember, they're supposed to be tightening, unwinding their balance sheet. So we've got quantitative easing happening at the same time as tightening, but don't call it quantitative easing, right? This is just madness, what's going on here. Also, don't call it a bailout. This is not a bailout. These are just emergency loans, right? Don't say bailout. It's emergency loans. That's what they want us to say here. That's what the banks or the bankers want us to say. They want you to believe that. U.S. Central Bank had $155.2 billion in loans outstanding to financial institutions through two backstop lending facilities in the week through April 26th, compared to $143.9 billion the previous week. So not only is it ongoing, the amount is getting bigger. The backstop or the rescues are getting bigger and bolder. And also next week, we are all pretty much expecting another rate hike. It's probably going to be a very tiny rate hike. And again, we have to ask the question, if they're really trying to stop inflation and inflation is still not back down to that 2% inflation target, why are we having these tiny rate hikes, right? If you really want to stop inflation, and if rising rates or raising rates is the solution, why are we raising them so slowly when inflation is still way above 2%, right? So ask yourself that question, and then you have the answer. I don't think they really want to stop inflation, because if they do, the entire economy, this illusion of a great booming economy, gets blown right up. Bloomberg, U.S. pending home sales fall 5.2%, the biggest drop since September, and that was as of March. Now they're acting like this is a surprise. Home prices still haven't corrected enough to make people that couldn't afford them be able to afford it now, because you have the higher mortgage rates. Investors are pulling back. Even investors are like, wow, these prices that we're paying for these homes may not pan out when you look at the renters and the people that are supposed to be paying these high rents. We look at all the job losses. Even investors are being very cautious right now. So pretty interesting. Now, of course, they're blaming the drop in sales on low supply. Yes, there is a low supply, but even with the low supply, if you had affordability, you would then just have more sales, bottom line. So, this housing market is not correcting fast enough to bring people from the sidelines for the most part. They're trying to find creative ways to get people into housing. Remember, we talked about the better credit score people are going to be basically paying for the people with bad credit scores to get them into housing. That's going to start here in just a few days as of May 1st. So that's going to be very interesting to see if that's going to bring any new buyers back into the housing market. I kind of doubt it, because prices are just so out of whack that it's going to take a lot more than that. I think they're going to have to give out 0% mortgages again, which is pretty silly when you think about it. But when you look at the other things they're doing, it's actually not so silly. Oh, another country ditching the U.S. dollar. Argentina now abandons the U.S. dollar in trades with China. And that's just the latest one. Just over the past couple months, we've heard about several countries doing this. Brazil, Saudi Arabia, now it's Argentina. Massive, massive de-dollarization is happening. Argentina will start buying the bulk of its Chinese imports in yuan instead of dollars. So just in the past few months, we've heard stories out of Brazil, Saudi Arabia, India, Argentina, all these different trade agreements happening outside of the U.S. dollar. Doesn't mean the dollar is going to be done. Of course not. The dollar is still going to be here. And all these currencies that are fiat currencies are not much better than the U.S. dollar. It's still not good that they're trading outside of the dollar. It's not good for the dollar anyways. But you're comparing one fiat currency to another. What's the cleanest shirt in the dirty laundry? The countries that are going to go to precious metals, that's going to be where the big shift will happen, in my opinion. Let's talk about Amazon. Amazon stock had witnessed about a 12% gain, and then all of a sudden during a conference call, the 12% gain was erased as the company announced that in April there was a big slowdown in growth. And what did they say? They said it was because the U.S. consumer basically is in a pinch, and the U.S. consumers are being more cautious and picky about their spending. So another sign, another thing that tells us, where this economy is really headed. And of course, we can't go an episode without huge layoff announcements. We've got Dropbox out there laying off 500 people, which is about 16% of its workforce. That's another big one. Lyft laying off about 26% of its workforce. Also, a recent headline here, job postings for white collar professions have plummeted 55%, and that's per Indeed. The job site Indeed is saying that. We have more media outlets laying off people, media outlets folding. Other huge layoffs here. Some of these we covered, but some of them we haven't here. Tyson Foods, 10% of corporate jobs. We talked about Lyft just a minute ago. Gap, we talked about them a few episodes, 1,800 layoffs. Let's see here. 3M, 6,000 staff around the globe. David's Bridal, we talked about them, 9,000 layoffs. Red Hat, that's another tech company. It's going to be 4% of its global workforce. Open Door, we talked about them recently as well, over 500 jobs, which represents 22% of its workforce. Of course, we have the banks, we have the Walmart corporate jobs, Facebook/Meta, Amazon, on and on. I mean, it just continues to pile up here. Now, when are we going to see the unemployment number actually reacting to this? Well, depends on if they change the formula again. But if you look at the labor force participation rate, we still haven't recovered from the drop-off that we saw in 2020. It came up a little bit, but we're still not where we were prior to 2020 as far as the labor force participation. So once you're out of the labor force for so long, you're magically no longer counted as being unemployed. So for those that don't know, I try to put that out there at least every month or two. So maybe new viewers or people that didn't hear me break down, how that works, would understand that the numbers are fake, the economy's phony, and we need to continue to brace for things to get worse, but also look for investment opportunities. And remember the meme at the beginning, find a cheap date that's not going to complain about you going to a low cost or a cheap restaurant. All right, folks, hope everybody's well. Keep stacking. We'll talk to you very soon. Come back for more news, financial, economic updates. Bye for now. Big love. Peace.